Good morning, ladies and gentlemen. This is Clueless 8, and this is the pre-market AM report and a quick synopsis of the weekend report for Monday, November 16th, 2015. There's an old saying that there are decades when nothing happens, and then there are weeks that decades happen. Well, that's pretty much what it felt like in the past couple of days, and especially the last week or so, and more so over the weekend. The tragic incidents, the terrorist attacks in France, in Paris, have not only shocked us all, we know these type of things are omnipresent, but the level of the atrocity really took the world by surprise. Here's a bit of macro global political and economic game theory for people who don't quite understand what happens when these things happen. I'm a survivor of 9/11. I know what it feels. I know the pain and the angst that people go through when you lose friends, when you almost lose your own life, not knowing if you're going to see your family that day. And the reality is, it does nothing but make us stronger. The markets will act accordingly. What you're seeing behind you, and this is obviously a very, it's a much longer term chart going back all the way from the beginning of the year. This green candle represents the resilience and the stubbornness and the optimism and the hope of world financial markets and the peoples of the world, mankind, to fight evil. And that is exactly what we're going to endure, what we're going to go through over the next couple of weeks as we go towards the end of the year. The reality of the situation is, it doesn't seem right to a lot of people who are novices in this business, but war is good for financial markets. Just the way it is. For simple economic reasons. There's more spending, there's more stimulus, there's more programs on the security side, there's more spending on defense. And at this point in time, as we sit here in our comforts of the United States of America, we have a massive worldwide globally coordinated attack and bombing campaign that's been conducted, similar to what we had done after the 9/11 attacks in Afghanistan and then subsequently Iraq. The French are not kidding around. I don't know how much of you guys really understand cultural game theory, but the reality is I think they've been pushed to the brink. Paris is an unbelievable multicultural city, and among all the victims who died, there were people from all creed, color, religion, and it was just horrendous. So the reality is the French are not going to sit by. With the Russians on board, and I don't really care whether I like Putin or not, this is far beyond that. With the Russians on board, what they're doing in Syria, you're going to see the resurgence of a massive global coalition that's going to basically hurt and, I shouldn't say decimate, but reduce the potential of ISIS. And saying all that, the real thinkers of the market know that. Okay? This is the beginning and of the end of ISIS, in my opinion. It will be a long struggle, but we shall win. All right, let's get straight to the markets here. At this point in time, what you're seeing behind you is the S&P 500. These are obviously the E-mini futures. After a powerful drop pre-Paris attack from 2109 all the way down, we tested the 1997 mark. That also happened to coincide with what I've been showing for a while. Didn't think it was going to happen that quickly, but I did warn people on this matter that that would be a possibility. I repeat again for a lot of new people who are listening, trading and investing is a game of probabilities. It is not a game of certainty. If you're looking for certain binary linear outcomes, and if you guys don't, if some of you don't understand what those mean, please Google it, okay? Binary linear outcomes, 1 + 1 = 2. It's either a yes or a no. Well, it doesn't work like that, okay? So that's just the way it is. At this point, the only thing we can rely on is past experiences. I certainly have many, but also looking at technical details and trying to make some head or tail out of what's going on. So saying all that, I'll show you some really important charts, and we're not going to keep this long. The bottom line is, here is we have the daily of the E-minis. Call it the market, the futures, okay? Here was the trading band that we were traveling on till we dropped out of bed on August 21st, and that was the crash. Reminder. Then you had this. Then you had another crash that was on September 29th, roughly a month and 5 days later. That created a dragon bullish pattern. Then we took off like a rocket. That 90+% of traders out there, and believe me, I know. And if they said they caught all of that big move and that they believed that the market could get up almost to its previous highs, they are lying. The fact is that most traders got in after this so-called breakout. Well, the breakout did happen, and then we had a corrective pullback. When you look at it in hindsight, there's absolutely nothing wrong in this pattern. We came back, we tested the upwardly rising, I repeat, 50-day moving average, the 34-day moving average, and as long as these two lines over a period of time, especially on the longer time frames of the dailies, are starting to move higher, I mean, not starting to move higher, but keep the directional bias on the upside, then you're going to be okay. When they start to turn like they did here, and of course that turn, just with force, when it's called the impulse sell-off, waterfall decline, that's when you start to talk about bear markets and things like that. And even after this drop, the markets managed to hold themselves off the 1800 lows and started to come up nicely. We had the crossover here of the 34 and the 50 on the 23rd of October. I pointed that out prior to that, and now we're here. So the 50-day moving average is critical, but then at the same time, it's a watch pot that never boils. Everybody's watching that, right? So the bottom line is that it's nothing new. We're finding support here, and it's possible that we can slip. And the slippage, in my opinion, can bring us down to test this pivotal low, which was on the 14th of October, when we had a sharp move up here from the lows of September, and then we had a bull flag development in these two red candles, which again, the bears, the dogmatic bears, I should say, not the tactical bears, pounced on and said, okay, this is the end of it. It tested almost a 50-day moving average. At that point, it was sloping down. The line was sloping down. Now it's sloping up. So that's a good thing. So what do we think we can go from here? Just on the looking at the face value, the chart pattern. What we can see from here is we need to break out off the downtrend line at around 2026. That comes to about 2023 on the S&P 500, on the SPX. And hopefully we can regain back this consolidation channel, right? If we regain back this consolidation channel, the best we can get to is around 2069 or 2070. That comes to about 2077 on the S&P 500. So all these levels are extremely important to me as a trader who relies on the market for his income. And so obviously that's something critical to keep in mind. Let's take a quick look at the internal. We're going to keep this simple. After a huge drop, and look at this internal here, okay? And you get down here at these levels, every single time that we have gotten down to these levels here, the market has had a dead cat bounce, or in this particular case, a ferocious bounce. That again, I repeat, majority, 90% plus of traders sat there and watched in shock and awe as the market moved forward. A lot of you included. So, learn from past patterns. That's what it's all about, So, and then we had this August crash, and this is where we were, right? Down here. So we're back down here again. It doesn't mean it's going to be a one-way runaway train to new highs. The channel highs on the thing, if everything, if things held, this channel held, is around 2200 plus. Is it possible by the end of December? Absolutely. Is it possible that we come down and test the 1800 levels again? That's a possibility too. We don't know the unknown, the unquantifiable, whether there's another attack coming, whether there's another, you know, major issue brewing. All I know is a lot of the issues in the market, a good portion of them, a substantial portion of them, have been talked about, rehashed, amplified, and the markets are quite cognizant about the deficiencies in the global economies and what this, the slowdown and all that stuff. Now, saying all that, if you just follow technicals and not the mind, which is the worst enemy to trading and investing, then you can start to see this particular, I'm going to highlight this. I'm going to start to see this particular move. As you can see, this is live, so it's twitching, right? Move up and then get overbought again. At what time frame does it happen? It'll happen quicker than you expect, and that I can assure you. So when you sit around twiddling your thumbs waiting for massive confirmations, it's going to come in the middle of the night, and it's going to come so fast and furious you will not have a chance to get in. So what's the best way to do it? There are no best ways. This is a risk market. You need to basically scale in, and when we have these big up days, you need to sell out into them and keep some positions, rolling it over. So that's just the only way to do it. If you're looking for that perfect moment, that everyone's looking for, that linear binary moment of perfection, it just doesn't happen in the markets or in life. We just have to fight the waves that hit us, and we prevail. So whether the bull market is broken or not, I don't know. All I know is on a technical basis, I'm looking at the dailies here, keeping things in perspective. There's the opportunity to make some substantial amounts of money as we get into Thanksgiving, going into Christmas. And in between, we'll definitely have more corrective pullbacks. There's no question about it. So that's really what I'm watching here. I'm watching a cross over the 5-day moving average, over the 34, back into the channel. A channel rejection would also bring us down, maybe a retest of the 50. All that is coming. Let's take a look at oil here on the bottom line. So you can see that. I'm showing a double screen here. So oil basically spiked. I can assure you, once the campaign, the global campaign really takes steam, there will be oil disruptions coming out of the Middle East, especially from where ISIS is, because they have oil refineries. They're selling illegal oil in the black market, and the bottom line is there will be disruption. Will it take away the oversupply of oil in the U.S. and overseas? No, but my point is that I think oil has tested its low. Maybe we retest again and slip a little bit lower. But this is the channel that I'm following. I'm buying the USOs. They're cheap, not like millions of dollars there, But if they go, they will go, and they are going today. So this was the close on Friday. This was the close on Friday, right there, somewhere there. And right now we shot up to the top of the channel. Remember, this is my channel that I had drawn, right? Top of the channel, and we're having a pullback. This could bring us down to here again, but I think that we are starting to see the first signs of a Bollinger curve up. So that's a big plus. Okay, so we're going to keep an eye on this here. Looking at this particular chart here, which is also not, I just have 2 minutes left here. You can see we have the downtrend line. This is the SPYs, and we have the uptrend line here. Bottom line is we were diving straight down to the 50. We did that overnight when we opened down about 17 or so S&P points on the futures handles last night. We tested these levels. So this level had now been tested. So a reversal bounce brings us up to 204 and then possibly to 205. We see that there's a lot of supply overhead, as a lot of there's been quite a bit of technical damage over the last couple of days. Therein lies the opportunity, but also there will be pressure in the markets to satisfy the institutional margin calls that are waiting to be sold. This is the way it is. Looking at the S&P 500, same story. Deep oversold conditions. We did get resolved here overnight. At this point, this should hold, and then a reversal bounce. And I explained on the other side what might happen. We'd like to enter the channel. We don't know whether we will. We might get rejected here, but we'll see. Thank you for listening, and good luck with your trading. God bless America.